Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about inflation. Okay, yes, look, I understand inflation might not be the thing you pictured yourself learning about on a Saturday afternoon after watching some cat videos, but I promise you guys you're going to get a lot of value out of this video because we're going to be breaking down how this economic crisis that we are currently in is going to impact the United States dollar and thereby the rest of the world through the concept of inflation. There's been quite a bit of talk recently about the massive $2.2 trillion stimulus package that the United States Congress passed and the impacts that's going to have on the inflation rate and whether or not we're going to spiral into hyperinflation like Venezuela or Zimbabwe or Weimar Germany. The answer to that is what we're going to be discussing in today's video. No sensationalization, no hype, no going over the top and saying that the world's coming to an end like 2012 is about to happen or something. We're simply going to be talking about the facts. And I think it might be encouraging to you as a lot of people, especially in cryptocurrency, are terrified of what is going to be brought about by this economic uncertainty. So guys, that's what we're going to be discussing in today's video. If you do enjoy today's video, consider hitting that like and subscribe button. We put a lot of work into these videos, and I would greatly appreciate the support. And before we dive on into it, I do first want to mention that the Cryptocurrency Technical Analysis Academy is on sale. If you guys want to learn cryptocurrency technical analysis, I would encourage you to do that. It has been one of the most profitable skills I have ever learned. CT2A is where you're going to learn absolutely everything you need to know about doing technical analysis. There's a $40 off coupon code in the description down below, that being April 2020. Use it at checkout, get your coupon, and go ahead and start learning. More on that at the end of the video. But without much further ado, guys, let's go ahead and dive right on into it. Guys, I decided like 2 weeks ago when we went into like this self-isolation thing that I was gonna like grow a Gandalf beard, and I'm starting to notice that I'm starting to look like a caveman again. Like when I first did the face reveal, I looked like a caveman. I'm not sure how long I want to keep this up, but tell me in the comment section, what do you think? Do I grow the beard out like down to here? Do I do that? I think it'd be pretty funny. I don't know. What do I do? Tell me. Anyway, guys, make sure to go grab your favorite coffee mug. Cheers, and let's go ahead and get on with it. The first thing that I want to discuss are the causes of inflation, because there are a lot of people that are thinking, oh, well, this $2.2 trillion stimulus that the United States has just passed is going to cause hyperinflation. It's going to inflate the living crap out of our currency. But guys, what some of you may not know is that during the 2008 financial crisis, an $800 billion stimulus package was passed, and the inflation rate in 2008 was 0.1%. In fact, if we look here on this website from thebalance.com, we can see the inflation rate over the years and the underlying interest rate of the economy in this column right here. In 2008, we saw 0.1% inflation. In 2009, we did see slightly higher inflation, but still less inflation than what we saw in the year leading up to the financial crisis. From there, for the next 10 years, during this last bull market that we were in, we sustained a 2% inflation rate, which is exactly what the Fed targets. As well, we continued to match about a 2 to 3% expansion rate, and we did start raising interest rates in 2015, albeit we should have raised them faster and earlier, but we did start to raise them. Why does all of this matter? I'm a cryptocurrency YouTuber, not an economist. Take everything I say here with a grain of salt, but why am I bringing this up? The reason I'm talking about inflation, guys, and I want to address this early on in the video, is because a lot of people love Bitcoin because they expect the United States dollar to hyperinflate in the next 10 years and our entire economy to crumble. Let me be the first to tell you, if that happens, if the United States dollar hyperinflates, it is the world reserve currency. If that comes to pass, the entire economy, all of modern civilization would shut down for 5 years or more. I mean, that is literally about the closest thing to an apocalypse that I can think of. Every single financial institution on planet Earth would go under, and every single person on planet Earth would all of a sudden have basically no money. How does an economy function when the entire currency is simply invalid? The United States dollar is not going to hyperinflate anytime soon. There are many factors that go into inflation, having to do with job growth, having to do with GDP per capita is something, because the more money you have on the sidelines to go and spend, the more you stimulate the economy. It has to do with cost of goods and cost of production and transportation. Inflation is much more than just quantitative easing and how much money the Fed is pumping into the economy. The reason I'm talking about this on YouTube is because there is a false sense of security about the future for Bitcoin in a lot of the people in this space, because they think, oh, well, every fiat currency on planet Earth is doomed to fail. And I'm not going to lie, I've been guilty of saying that in the past as well, and I'm not a fan of fiat currencies, don't get me wrong. I would prefer for the United States dollar to be backed by something still, but it's not. A lot of people are expecting our current financial system to crash and burn in the next few years, and maybe it will sometime this century, but I don't see it coming because of this, and I don't see it coming anytime soon. We are talking about inflation today because it is one of the core arguments for Bitcoin and its entire existence for some people that don't understand the full picture, and I want to explain to you that we're actually probably going to see lower inflation in the next 2 years as a result of this than higher inflation. Let's continue. You may be familiar with the case of Weimar Germany after the First World War, after the Treaty of Versailles levied billions of dollars of reparations on them, or Zimbabwe, where the currency was hyperinflated and $100 trillion notes were being printed, or Venezuela, where a socialist government came in and took over everything, including the oil, and it hyperinflated the currency when they had to print money to keep their people fed. Hyperinflation is a fact, and it does happen, but there's a difference between all three of those instances and the United States. Number one, the United States is the strongest economy on planet Earth. Weimar Germany was a post-war wreck of a country. Zimbabwe is a third world country that had not even come close to developing into a first world country. Venezuela was ruled by an idiot. Their entire economy was built on top of oil. America is a very different case than those. And you may say, okay, well, Jeb, America is a different case, but because America is more secure, it's just going to kick the can further down the road. Maybe you're right. Maybe in 2150, something terrible happens. I don't know. I can't profess to prophesy over what the future is going to hold. But I can show you this. There are three different ways of calculating money supply. There's M1, M2, and M3. And I'm not going to get into all of them, but essentially they track different kinds of money and how money is dispersed. M1 is a very important number to the economy. It essentially tracks how much actual cash there is in the world. That number for the US dollar is about 4,000 billion US dollars, which is about $4 trillion. M2 is another type of money that economists normally track. M1 being cash, that being savings deposits, checking accounts, while as M2, it tracks all of those as well as things called easily convertible near money. And this is a very important metric to the United States economy, and frankly, because of that, to the rest of the world as well. Here, as we can see over the last 10 years, M2 has doubled from 8.5 to nearly $16 trillion. Now, setting aside for just a second all of the other causes of inflation, like I mentioned a minute ago, because those are very important parts. Let's say that we have $16 trillion in the United States. I'm massively oversimplifying this to make a point. Let's say we have $16 trillion in existence. There's just 16 trillion US dollars. That's all there is. Forget about all the debt and all of it. Let's just, to make a point, let's assume that that is the amount of US dollars in circulation. Well, let's come over to CoinMarketCap. Bitcoin has about 18 million Bitcoin in circulating supply. So let's just use that number. You know, 18, 16, they're kind of close. Doesn't matter. I'm making a point here. This is not for science. Don't go doing, economic stuff based off of what I'm about to say. If you double the circulating supply of Bitcoin, what happens? The price of Bitcoin gets cut in half. Why? Because if you double the amount in supply, then of course the price is going to go down because the market capitalization shouldn't have actually moved. It's going to be a little more complicated than that, but in general, if you were to double the circulating supply, you would expect the price to go down by 50%. Now, let's say you double the amount of M2, you double the amount of US dollars in our fake world here from 16 trillion to 32 trillion. You would expect the United States dollar to go down by 50%, which you would call that 100% inflation. Remind me again how much economic stimulus there was. There's $2.2 trillion. And by the way, all of that money was not being directly injected into the economy. A lot of that's not going to go into the M2 supply even. That's going to go into another thing called the M3 supply, and that's going to start adding to debt. So not all of that money, in fact, a large portion of it is not even going to attribute itself to inflation. Now you take into account how there are many other things impacting the amount of inflation that there are, such as how much money people have to go and spend on commodities, their leftover money. That is why during bull markets and in periods of growth, inflation is actually going up because people are spending more money. You have to take into account the production cost of goods, the transportation and delivery cost of those goods, the distribution of those goods. You take into account things like the real estate market, and it all levels itself out, guys. We are not going to see hyperinflation because of this. Hyperinflation on the United States dollar would take something even more catastrophic than this by a very long shot, or decades of failure of economic policy. And you may say, and you would probably be right, that we've already seen decades of economic failure in policy, but we are not anywhere near in hyperinflation. Number one, this is a crisis-driven recession, which means that after it ends, everything should hopefully come roaring back within the next year or two. Number two, most of the money that is being printed into the economy is not actually going to go into the money supply, and it's not actually going to impact the inflation rate. Number three, historically, when recessions happen, you actually see the inflation rate go down. We saw the same thing happen after World War I, after World War II, and at the beginning of the Great Depression. We saw inflation go down into deflation. We saw nearly 10% deflation over the year in several of those years. As you can see, in 1930, 1931, 1932, we saw a negative 6.4% inflation, negative 9.3% inflation, then negative 10.3% inflation. inflation. By the way, that much deflation is a bad thing. And number 4, inflation is actually seen by many economists as a good thing. About 2% inflation is what the Fed aims for, and part of the reason for that would be because it incentivizes people to not sit on their cash and to go ahead and invest in things like the stock market and the real estate market, and to keep that money flowing through the economy so that people aren't sitting on piles of cash that doesn't get spent. It is a natural / artificial stimulus to the economy when you have about 2% annualized inflation, because people have an incentive to not sit on all of their cash. They have an incentive to go invest it in the economy and keep the economy driving forward. So at the end of the day, why did I make this video? Because I have a feeling it's going to be somewhat unpopular. There are a lot of people in the cryptocurrency market that are predicting the downfall of human civilization through the hyperinflation of every currency known to man because of some boogeyman recession that's going to come in the next 30 years. Look, there are going to be economic crises. We're going through one right now. Don't get me wrong, there is going to be hardship. That is simply a fact of life. I think we all know that. But I also don't want you guys getting freaked out, because everything that's going on right now is reason enough to be concerned. I don't need you worrying that the entire global economy is going to collapse because of this, because there is going to be a period of hardship here, but it is going to come to an end. It's not going to be the end times. Our modern civilization is not going to crumble. We are going to be okay. And I will leave you with one final point. Following the 1918 outbreak, we saw one of the biggest periods of economic growth in American history to that point, the Roaring '20s. The entire modern financial system came into its own as the banking system matured, as the concept of credit matured, as we saw loans being taken out, and the modern system started to be born. Following very shortly thereafter, because we didn't understand what we were doing, we had the Great Depression. We now at least have some understanding of what we're doing. And you already know this, but I'll say it anyway. Of course, a lot of the politicians are short-sighted. They only care about what's going to happen while they're in office, and frankly, some of them are going to be in office until the Ice Age comes, so maybe they should care longer term, but they don't. Was going off the gold standard a good idea? That's, a lot of people say no. It's a hard question to answer. It's a very, very loaded question, and I don't claim to have the salt to answer that with a lot of certainty. I don't think it was, but that's a question we can debate. Are we off the gold standard? Do we have to deal with more inflation? Because, by the way, there was plenty of inflation before we went off the gold standard. That is not the only driving force of inflation. We have what we have right now. We have to play the cards that we are dealt, and we are played, to be completely honest with you, a pretty damn good hand. As much as we bash the Fed, as much as we bash Congress and the president, as much as you guys may bash the central banks over in Europe, the first world has it really, really good nowadays. There are plenty of things to be concerned about. There are plenty of things to be worried about. We should never stop fighting to make the world a better, more just, fair, and safer place. Well, of course we shouldn't, but we also need to spend just as much time or more focusing on the good things that we have, like a pretty stable economy, than the bad. We're blessed to be born in the 21st century, not the 21st century BC. We're blessed to be born human beings, no matter where you are in the world, because you could have just as easily been born a stop sign, and that seems like a boring existence to me. Be thankful for what you have, keep your eyes on the prize and your head in the sky, and we're all gonna be just fine. Anyway, guys, that is going to wrap it out for today's video. If you enjoyed today's economic lessons, consider hitting that like and subscribe button down below. It really helps out the channel when you do that. And before we go, I do want to mention the Cryptocurrency Technical Analysis Academy, because we have just started a sale on it, and that will be running through Monday. If you guys would like to join CT2A and learn everything you need to know about technical analysis so that you can actually start learning how to trade and invest and profit in cryptocurrency markets, this is where you need to be. There are 1,400 students in the Cryptocurrency Technical Analysis Academy. You can join our Discord server down below and talk to any one of them if you would like, to get their private testimony so you can see what the course is like before you even join. If you click the link in the description down below, you'll actually get a preview of this video right here, how to set up and use TradingView. That's a 35-minute long video packed with hundreds of pieces of information, and it is a very, very, very useful video, especially if you guys are newer to cryptocurrency. And of course, we have all of our much more advanced concepts down here below so that you guys can really get a very, very precise understanding of the cryptocurrency markets. Like I said, this sale will be running for a few more days, so if you're interested, go ahead and join down below. There is a full 14-day money-back refund guarantee, and yes, you can pay in Bitcoin. Anyway, guys, that is going to have to wrap it out for today's video. Make sure to tell me what you think about the Gandalf beard. I'm considering it. Anyway, like I said, that is going to wrap it out for today's video. Before I go, though, I do first want to thank each and every single last one of you for watching, as always, though, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.